It's time for your Low Country real estate market update. It's the Brian Beatty Real Estate Show. Brian is one of the top 1% real estate agents in Charleston. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. Now, broadcasting from the WTMA studios, here's your host, Brian Beatty.
Good morning, Charleston, and welcome to another edition of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. I'm your host, Brian Beatty. Thanks for joining me for another discussion about housing here in the Charleston market. I've been doing this show for about 7 years. I've been selling real estate for 14. I've been a top agent here in the area for the past decade, top 1% of agents in the nation, and I share my experiences and thoughts on the market with you to help you better prepare for the time in which you're going to buy, sell, or invest in real estate. So that's what this show is all about, arming you with the information you need to make informed decisions about the market so that you can win in your transaction. Now, if you'd like to reach out to me personally, you're thinking about buying, selling, or investing in real estate, I can be reached at listingsincharleston.com, which is my website, listingsincharleston.com, or you can, of course, give me a call. That's my private phone number, and, of course, that'll be an off-air discussion. That number is 843-400-8009, 843-400-8009, and you can always send me an email, brian@brianbeattyteam.com. So I want to talk about the volatility that it's in our market right now. It's really difficult to nail down values in this market. We're in a market right now where inventory is very low in some areas. It's abundant in others. It's creating pockets of appreciation, depreciation, prices going up, down, staying the same. It's kind of difficult to sift through. It's a little all over the place. And so I want to talk about that. I want to give you some scenarios and some of the things that we deal with on a day-to-day basis. I also want to talk about a report that came out about Zillow. We haven't talked about them in a while. I really want you guys to understand what's kind of happening in the background with some of these disruptors in our industry and how I think this is going to potentially change our industry moving forward. And I want to talk just more generally speaking about the process of buying and selling a home, especially this time of year. We've got a lot of folks that have reached out to us in the past few weeks, and they want to take their time in creating a plan, which I love. I really appreciate it and respect it when people do that. They take the time to understand the process as it relates to them, their home in their area, the home they're going to buy, and what that market looks like, and what they should expect in the process, and how we can prepare along the way so that you're saving more money and you have just realistic expectations about the process. And so that's the plan for this show over the course of the next hour. And again, if you want more information on my team, who we are, what we do, what we sell, how we sell it, all that fun stuff, lots of great information on our website, listingsincharleston.com. And if you want to hear previous versions of the show, by the way, we have, over 300 videos on YouTube. We're on iTunes, Spotify, Google Play, all that fun stuff. Just look up the Brian Beatty Real Estate Show, and you'll be able to find it. So let me tell you about this deal that we're going through right now. We have an investor that we work with, and he's flipping a few homes a year, wants to do more, and we use a hard money lender for that, so that he doesn't have to spend all of his cash on these deals. There's a point, which is 1% of the purchase price that he has to pay up front, and then the interest rate's about 8% on a monthly basis, which is frankly a great deal when you're using somebody else's money to flip properties. And so here's this deal that we're going through, and I want to kind of use this as an example of some of the volatility in which we experience and how challenging it can be for agents and buyers and sellers to really nail down value. So here's this deal that we're going through right now. We have it under contract for $195. We think we can sell it for $290, and that's a conservative price. When we're analyzing these properties that we're going to flip, whether it be something I'm flipping personally or an investor that we're working with, of course, we want to know what the end result is going to be before we even become interested in this property to the point where we're going to make an offer. We need to know how much we can sell it for. We need to know how much we think it's going to cost us to renovate the property in order to achieve that sales price. Of course, we need to know all the costs associated with holding on to the property while we're renovating it. We need to know all the costs associated with buying it and then selling it. And then based on how much we want to make on that deal, that then determines the maximum amount that we can buy that property for in order to achieve that return on investment that investor is looking for, or that I myself am looking for. So in this particular example, it's under contract at $195. We think we can sell it for $290. It's going to cost us about $45,000 to renovate it. And after, all the carrying costs and the fees associated with buying and selling it, this investor is going to make about $30,000, $25,000 if you want to become even more conservative. So on paper, it makes sense for this investor. Based on our consult, it makes sense for this investor. We think we can get this done for him. But he's borrowing money from a third party, and that third party wants individual verification that this is, in fact, a good deal. This is something that this investor isn't going to lose on. And so they usually hire either an appraiser or what's called a BPO agent, a broker price opinion agent, that provides something very similar to an appraisal. It's not. It does take into account individual adjustments for all the various things that go into valuing a property: lot size, lot characteristics, condition of the home, upgrades within the home, bedrooms, bathrooms, square footage, interior, exterior amenities, all those things. Anyways, appraisal number 1 says that the as-is value is $145,000, and the ARV, the after renovation value, is only $270,000. And so this agent on my team brought this to my attention, and we start looking through this appraisal, and I said, this is unfortunate, because this is what people, sometimes do, and pass this information off as reliable researched data. They only used one sale that sold for exactly $145,000 in similar condition to what our property is in. But there were plenty of other comps that supported a much higher value, very close to what we're under contract at, $195,000. So we said, you know what? Let's get a second appraisal. The second appraisal comes in at $192,000 in as-is condition, but only a $250,000 ARV, after renovation value. The BPO agent didn't ask any questions about the extent of the work that the investor was going to do. And so you have this huge variance in what people believe this property is worth in its current condition and then what it's going to be worth after the sale, even though there are properties in this very specific area that have sold in the lower 300s. We're being conservative at $290,000. We know the market. We're not going to steer our investor toward a deal that doesn't make sense. But now we have to convince these agents that have done their quote-unquote due diligence to provide a report to the lender that says, hey, this is how much it's worth right now. This is how much it's going to be worth after renovations. Well, of course, in order to determine that, we need to know, or they need to know, what all is going to go into this property. What is it going to look like once it's renovated? You can't make assumptions based on that. I could do the, simple carpet throughout and a paint job and clean everything up, and that's going to be a wildly different value than putting in engineered hardwoods and new cabinetry and quartz countertops and stainless steel appliances and, doing really nice things in the bathrooms and adding a deck and a fence and landscaping and a new roof and new HVAC, and the list goes on and on and on. And the point in telling you this is that pricing homes in this market, obviously it's going to depend on the area, the price range, inventory, what properties are selling for. And you're starting to see more lowball offers from buyers. It's just becoming more commonplace in some of these saturated areas of Charleston. And we've got pockets in, the Tri-County area that are hot, some that are just lukewarm, and some that are not, some that have gotten kind of cold. Inventory has crept up. We've got some areas of Charleston with almost a year supply of inventory, which very much so represents a buyer's market. Those sellers, those buyers should have different expectations compared to a different market in Charleston that has very little inventory, where maybe prices have gone up 5% over the past 6 months. That's not uncommon. I've seen it happen. But buyers think that Charleston real estate in general is, and we're getting a lot of this right now, buyers are tending to think that Charleston real estate in general is overinflated. We got an offer on a house that we've had listed for a while, and it's a specialty property, and it's kind of out in the middle of nowhere on the water. It takes a very specific type of buyer to want a house like this. And so they made an offer that they tried to justify with, days on market and what they believed the property was worth. But then it kind of, the overarching message was that, well, hey, you know what? All real estate in Charleston is overinflated. So, I'm not going to pay what Charleston thinks the property is worth. And I can see why people would say that when comparing Charleston to another area where prices, just generally speaking, are lower. But prices, generally speaking, are supported in large by what other people are willing to pay for similar properties. And so, every seller out there wants a realistic idea of what their home is actually going to sell for. But agents, we love focusing for whatever reason on the list price more than the sales price. This is how much I think I can list it for. And sellers, they get dollar signs in their eyes when they hear these list prices, which is why you should be interviewing multiple agents. And we're going to talk more about that in a little bit. But they focus on the list price more than the sales price, mostly because they don't know how much it's going to sell for. If they really don't understand the dynamics in the market, if they are not in that market, selling real estate in that market, or they're not doing their due diligence to really understand the trends in that market right now, then they're relying on historical data. And I was telling another agent on my team this earlier in that, he had received an appraisal from somebody on a house about a year ago, and that owner was trying to use that appraisal to substantiate current fair market value. And so I just want to take you through this really quickly because this is going to be kind of a springboard into the next topic I want to talk about, which is Zillow and what they're doing with this instant offers program and how I think it's robbing people of true equity in their home and the ability to sell it for thousands or tens of thousands of dollars more. But here's really how pricing works. And it's really important when you're talking to an agent, when you're about to list your home for sale or you're about to make an offer on a property, that they understand this, that they help you understand this. When we look at a property that's on the market right now, let's just say we're representing a buyer. We're going to look at that property, we're going to look at the list price, and then we're going to do research to determine what similar properties in the area have sold for. What properties are going under contract? What properties are not selling? What's expiring and withdrawing off of the market? And we're going to go back about 6 months. If we have to go back a little further because of a lack of data, we will. But here's what you need to understand. If we're looking at a property right now and it's listed for, let's say, $309,000, and we think it's worth $300,000 right now, here's what we've done. We've looked at everything that's sold over the past 6 months. We've made individual adjustments for the condition and the upgrades of that home and some other factors, of course. And we've also determined what we believe the trend in the market has done to that value and the demand for that property over that period of time. Because if something that we're using to justify value sold 6 months ago, let's look at that comp for a minute. Let's say it sold 6 months ago, but it was on the market for 3 months. That means they listed it 9 months ago. And when they listed it and that agent was looking at values to determine a fair listing price, they were looking at properties that sold 6 months prior to that. And maybe some of those homes took several months to sell. So you have this backlog of data. And if you're not filling in that backlog with current trends in the market, has the market stayed the same? Has it gone up? Are buyers willing to pay more than they were 6 months ago or 9 months ago or 12 or 18 months ago? That's how we're analyzing these properties. That's how we're getting our asking prices very close to what these properties that we're listing are actually selling for. Our properties sell for 98.5% of asking price because we understand how to price a property. But most folks just don't go through that amount of effort and detail in pricing a property, mostly because they don't believe that you, the seller, needs to know all of that information. What you want to know is some sort of substantiated number, which can be done the easy way by taking everything that's sold over the past 6 months and averaging out a price per square foot and saying, yeah, it's worth about this amount. Which again, I think I talked about this on my last show. That's the lazy man's way of valuing a piece of property. You really have to understand market dynamics. And we have a lot of folks right now that are contacting us thinking about selling in the next month, 2 months, 3 months. They're asking questions about, hey, does it make sense to put our home on the market right now? Should we wait until the spring? And I love getting those kinds of questions because it allows us to truly strategize with you. And we can't give you a one-size-fits-all answer because it's all very dependent upon your market, your price range, your area, demand among buyers, current inventory or lack thereof. We take all those things into consideration and we put together a plan for you so that you have a researched, informed plan when it's time for you to make a move. So if there's anybody out there that's thinking about going through this process in the next few months, even first few months of next year, let's start planning it now. And I promise you that time that you spend now and that ability that you give us to help you prepare for this process does in fact mean more dollars in your pocket. I firmly believe that. So if that's something we can help you with, feel free to give me a call and we can go through that together. My number is 843-400-8009. That's 843-400-8009. Or visit us online at listingsincharleston.com. That's listingsincharleston.com. And stick around because I'm going to pick on Zillow next. You don't want to miss that. Stick around. This is the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA and WTMA.com.
More stimulating talk on real estate matters with Brian Beatty next on 1250 WTMA.